The US dollar is on a relentless tear against the Canadian dollar, and this isn't just a blip on the radar. It's a powerful trend that could define the market for weeks to come. But here's where it gets controversial. Everyone is waiting for a single speech that could either validate this move or send the entire market into a tailspin. This Friday, the USD CAD pair is climbing for its fifth day in a row, decisively breaking past the significant 1.390 level and even touching a fresh 3-month peak of 1.3917. Any attempts by the pair to fall back have been firmly blocked above that key psychological mark. So, what's fueling this sustained strength for the greenback? It all boils down to a cautious, risk-averse mood sweeping across the markets. Investors are essentially holding their breath, refusing to make big moves until they hear from the most powerful central banker in the world, Federal Reserve Chair Jerome Powell. He's scheduled to speak at the high-profile Jackson Hole Economic Symposium, and his every word will be dissected for clues on interest rates. And this is the part most people miss. The market is already overwhelmingly betting on a rate cut in September, with odds priced at around 75%. This creates a massive opportunity for a market shock. The real risk for traders isn't that Powell will confirm the cut. It's that he might push back against it. If he sticks to his recent message of patience and doubles down on warnings about stubborn inflation, particularly the risks stemming from trade tariffs, he could completely shatter current market expectations. This, conflicting signals from the Fed itself are adding to the confusion. Just look at the recent comments from other Fed officials. Cleveland Fed President Loretta Meste stated she wouldn't see a case for a cut in September, while Boston Fed President Susan Collins expressed openness to easing policy due to a potentially weakening labor market. This lack of a unified voice is keeping everyone on edge. On the other side of this trade, the Canadian dollar is facing its own set of powerful headwinds. Its fortunes are often tied to the price of oil, Canada's major export, which remains depressed and under pressure. Furthermore, the looming threat of a full-blown trade war with its largest partner, the United States, is casting a long shadow over the economy's outlook. However, there is a potential lifeline for the loonie today. The key data release for Canada is the June retail sales report. Following a disappointing 1.1% contraction in May, economists are forecasting a significant rebound and recovery for June. A strong number could provide the Canadian dollar some much-needed support by signaling that the Canadian consumer is still resilient and spending. Now, we want to hear from you. Do you think the market is getting ahead of itself by pricing in a September rate cut? Or is the Fed truly behind the curve and will be forced to act? Let us know your predictions for Powell's speech and the retail sales data in the comments below. Are you betting on a hawkish or a dovish surprise? Economic Indicator Spotlight. Event. Speech by Federal Reserve Chair Jerome Powell. Details. Mr. Powell, who assumed office as chair of the Federal Reserve on February 5, 2018, is scheduled to speak at the Jackson Hole Economic Symposium. His remarks are among the most closely watched events in finance, as they can signal major shifts in U.S. monetary policy, which has a profound ripple effect across global currencies, including the Canadian dollar. Next release is Friday, August 22, 2025 at 1400 GMT. Event. Canadian retail sales month-over-month. Released by Statistics Canada, this report measures the total value of sales at the retail level. It's a primary gauge of consumer spending, which is a huge driver of the Canadian economy. Think of it as a report card on how confident Canadians are feeling. If they're spending freely, it suggests economic health. A higher-than-expected reading is typically positive, or bullish, for the CAD, while a lower reading is negative, bearish. Next release is Friday, August 22, 2025, at 12:30 GMT. Frequency monthly. Forecast consensus. Plus 1.5%. A strong rebound after a previous decline. Previous reading, minus 1.1%. Important risk disclosure. This content contains forward-looking statements that involve risks and uncertainties. All market analysis and information provided here is for informational and educational purposes only, and should never be construed as direct investment advice or a recommendation to buy or sell any currency or financial asset. The foreign exchange market is highly volatile, and investing in it carries a substantial risk of loss, including the potential to lose more than your initial investment. You are solely responsible for your investment decisions and should conduct your own thorough research and consult with a qualified financial advisor before committing any capital. The views and opinions expressed are those of the author and do not necessarily reflect the official policy or position of any other agency, organization, or employer. The author has no position in the assets mentioned at the time of writing and has received no compensation for this analysis other than from its publisher.